This is John Kingston from JR Trading Zone. Glad to meet you all in this new video. In this video, we are going to talk about the secrets of candlestick. Okay, each and everyone when they come to the stock market, actually when they begin to study technical analysis, they will begin from the candlesticks. Okay, there are n number of candlesticks. There are a lot of candlesticks. Each and every candles have different names, technical names. We are not going to the technical side. Okay, we are just selecting only three types of candles, and these three type of candles is useful for us in trading. Okay, then one thing I want to tell, knowing candlestick and its logic is different from knowing candlestick patterns. Okay, candlestick patterns and candlestick are entirely different subject. Now we are going to study what are the different type of candlestick, and we only select three type of candlestick. We are going to study it in detail. If we know the logic of the candlestick, the name of the candlestick is meaningless. By hearting the name, there are a lot of candlesticks actually. We don't want all the candlesticks. We just select only three candlestick and study its logic in detail. Okay, then one thing I will say, studying candlestick without knowing what is price action is waste. It will be against you in your trading actually. So we know what is price action, what is support, what is resistance, and candlestick only works in particular location. Even though some candles are formed all over the chart, only we can consider when it is formed at particular location. I am going to make a computer presentation how these candles are used by professionals and how we can use these candles along with price action. Let's go to the computer presentation and compare. Yes, let's go to the board presentation, whiteboard presentation. You see candlesticks. There are a lot of candlesticks: Marubozu, hammer, hanging man, inverted hammer, doji, neutral doji, dragonfly doji, long legged doji, spinning top, and there are also n number of candles. Okay, when you study about candles, you will study a lot of candles, but this is not useful for a price action trader. I will only teach you three type of candles. If you understand the logic behind the candlestick, only these three type of candles are useful for us. Okay, you don't want to by heart the name, it is not useful. You should know what the candlestick is speaking to us. Each and every candlestick is telling a story, and we should know what is the story behind the candlestick. Let's go to the candlesticks. Okay, the first type of candlesticks is full candles. Can you see here? These are full candles. This is called an engulfing candle. According to candlestick, the name, it is called engulfing candle. I call it a full candle. Okay, full candle means this is a bullish candle. Bullish candle means the opening point will be here and the close will be here. Okay, this is a full bearish candle. Opening is here and close is here. Okay, these two candles are also similar to these candles, but you see open was here, close is here, but there is a small wick on the upside, small wick on the downside. This represents that the candle price moved up to this range, but it was not able to close here. The sellers came and dragged it down and it closed at this level. Okay, here also you see it moved up to this level on the downside but was not able to sustain there. It came on the upper side and closed here. Okay, this is bearish candle having small wicks on the either side. The same logic is applying here. It is opening here, it moves slightly up, then it goes down, it moves up to this point, up to this tail point, and it is closing here. Clear? These four candles are actually similar. These two candles are bullish candles because the tail is small. If the tail is small, if the wicks are small, we don't take it into consideration. Okay, this is a tail where the sellers are sitting. This is a wick where the buyers are sitting. Okay, do you know the logic? Price moved up to here, but the sellers pushed it down. Here the price moved up to this point. Here the buyers bought aggressively and brought it up to here. Okay, so we say these two candles are bullish candles and these two candles are full bearish candles. We don't give importance to the wicks in this setup. we give importance to the color and the size of the candle. Okay, the size will be very big size. The opening is here, it is moving aggressively and it is closing here. There are no sellers. It is a very powerful close. Here also the open is here and close is here. No buyers, only sellers. It is a strong close and it is closing here. Here a slightly small wicks is appearing on the top and bottom. We don't give importance to wicks in this candle. Okay. Therefore, our first candle setup is full candles. Okay. What do we mean by full candles? Full candles means a full confirmation whether it is bullish or bearish. Okay. But here we have a small wicks, but we don't take this wicks into consideration. Okay. This is the first set of candles which we have to follow. Okay, next we are moving to pin bars. Can you see and understand anything in this? These are pin bar candles. You see, the open is here, price moved up to this level, buyers came here, aggressively bought it, and now the close is above the opening. In this case, opening was here at the top, price moved up to this level, buyers again came and bought aggressively, price moved up and closed just below the opening. Okay, the vice versa is happening here. Open is here, price moved up to this point on the top, sellers came here aggressively and they sold heavily and the close is just above the opening. In this case, opening here, moved up, sellers again came aggressively and sold here. Now the close is below the opening. Do you get any logic in this candle? You see, do you get any logic in this candle? Here for this type of candles, we don't give importance to the color. Even it is green or red, no problem. We give importance to the wicks. This is the sign of bullishness. This wicks shows the sign of bearishness, where these candles are only valuable in right location. Okay, if you see this type of candles at the support level, you are drawing a support and resistance. If you see this type of candles at the support level, this is a sign of reversal, a bullish sign of reversal. If you see these candles at the top of the resistance line, candle broke and went high and made a big pin bar, inverted pin bar above the resistance, it is a sign of reversal on the downside. Okay, these candlesticks are only valuable. Not only these candlesticks, every candlesticks at the right location is valuable. Okay, you can see lot of pin bars between the chart, between the support and resistance line, in between the chart, anywhere you can see this type of pin bars. Okay, but we don't consider and we don't give value to that pin bar. These pin bars at the right location, if this pin bar is at the support, if this pin bar is at the resistance, the value is completely different. Okay, if you understand the logic, name is not important for the candlestick. Logic is important. We should understand what these candles are telling us. Okay, according to the location, the importance of the candle is different. Okay, definitely according to the location, it makes and gives us a different story. These are pin bar candles. Okay, first we studied full candles. There the color of the candle is very important, the size of the candle is very important, and in every candlestick the location is very important. That is different subject. Then we are coming to pin bar candles. Here color is not important, the wicks is important. Wicks give us a story. Okay, here in this both wicks, buyers are located. In this both wicks, the sellers are located. Now we are coming to the indecision candle. You see, this candle is called the indecision candle. Okay, you see, this is the indecision candle. Here the body will be very small, tiny body. long wicks on the upside and downside. Use the same logic which we studied in the pin bar. Think for a while what's happening in these doji candles. What is happening in these indecision candles? Price opens here, price moved up to here, sellers came aggressively, brought it down, pushed it down, and they brought up to this level. Okay. At this level bottom, buyers came aggressively. They think that it is a fair value. They bought aggressively and it is closing above the opening at this point, right at the point. Okay. Here also the same story. Opening is here. Price moves up. From this point, sellers are coming aggressively, selling, moving up to this point. At this point, lower level, buyers feel that it is very cheap and they come and purchase and move the price up to this point. Okay, in this point, color is not important. Wicks is having an importance and it is giving a signal for us, and the signal is the buyers and sellers are equally powerful, or there is indecision. Okay, there is indecision. We have to wait for the confirmation candle. Okay, where can we use this candle? What is the important location to be noted? In the support and resistance, in the CPR levels, we have to watch for this doji. If the doji is formed at these locations, we will never go for a long or short trade. We will be waiting outside and watching whether the bulls are taking power or whether the bears are taking in charge of the stock or index. Okay, we will be waiting. In this case also, again and again, repeatedly I am saying one thing: candlesticks are only useful at the right location. You can see a lot of dojis all over the chart. No importance of doji. Okay, but doji forming at the proper location. If you have drawn a support or resistance, or if you have CPR in your chart, right at the support, if there is a formation of this type of dojis, this type of indecision candle, you can't take any position. You should wait till there is a confirmation. If the bears are winning, you should short the market. If the bulls are winning the battle, you should go with the bulls. You should go long. Okay, that is the importance of candlestick. We just study only the three candlestick. I think I have made a clear presentation. What are the three candles we have to follow, and only these three candles we have to follow in our trading system. If you are a long-term trader, you can use one-day chart, draw support and resistance, use CPR, and at the support and resistance, you can see what price action is happening, which type of candle is forming at the support and resistance. According to the pattern formed at the support and resistance, you can take decision. Okay, for the first candle, it is a bullish candle, full candle. If it is a bearish candle, it is a full candle. It is also a reversible candle. And the next section we are coming to pin bars, and third we are going to indecision candle. I think I had made a clear picture on which candles we have to follow and how to follow. I will be showing an example from a chart, real chart, to give you more clarification, but it is not enough. You should open your chart. If you are a long-term trader, open one-day chart, put support and resistance, and see what type of candles are formed at this location. Okay, be very careful. You do your own back testing. Continuous back testing will give you conviction, and you can take your trades accordingly, and you will get great confidence in trading. Definitely. Okay, therefore we have to only follow these three type of candlesticks. Avoid all other candlesticks and don't go behind all other candlesticks. We just need these candlesticks, and if you understand the logic and if you understand what the candles are speaking to us, it's very easy, no problem. And let's go to the chart. Now let's go to the real chart and see how our candlesticks are working. Okay, this is 25th of November. First candle, first 5-minute candle is big red candle. Okay, what does it represent actually? Big red candle means, according to candlestick, it denotes the bearishness in the market. Okay, the market has to move down. So if a person is following only the candlestick, he will come and sell here in this point. Okay, he will short this candle, thinking that the market will go like this. Okay, I told you we can't use this candlestick without price action. Means without the support and resistance and price action, this candlestick can't be used and it won't give the right signals. Now we can apply CPR. CPR is a leading indicator and it actually denotes the support and resistance of the market. Before studying CPR, I taught you how to draw support and resistance. Then now we are studying candlesticks, and again we will come to the CPR section. Okay, CPR is a very big subject. We should study in a systematic way how to use CPR and club CPR with candlesticks. Now just let me apply CPR to this chart. Okay, see, can you see anything in this chart? Can you see anything in this chart? I am zooming out, zooming in. I am zooming in. Can you see anything in this chart? See carefully. You see, even though this candle was a big reddish candle, this is the CPR range. This range is called the CPR range. This entire range, these three lines are called actually the CPR range. Okay. In this CPR can act as a support or resistance. Okay, here the candle is above the CPR. So when it is coming towards the CPR, there are more chances this CPR range can act as a support. Okay, so a price action trader will not short here, will not go for a short trade at this point, and we should wait for the confirmation. There are more possibilities for the candle to reverse from this area. It may be reversing from this line or this line. These three lines together is called the CPR. Okay, when we plot CPR, there will be resistance lines on the top and support lines on the bottom. Okay, now I am not going deeply into CPR. I want to say how the candlesticks are working with the support and resistance. Okay, without the support and resistance, or without marking the CPR, you will have gone short in this candle. As you have CPR, the support and resistance in your chart, you will not go short here. You will wait for confirmation. Okay, do you see anything in this chart? Do you see anything else in this chart? See, here we can see a pin bar. Pin bar, you see carefully. Here you can see a pin bar. Pin bar means upward pin bar, positive pin bar. Even though the candle is coming here, it is not able to close down. It is showing a positive pin bar. This is a sign of reversal. This is a sign of reversal. But we can't take trade here. Aggressive traders take trade here and keep the stop loss below this central CPR. I won't take trade here. This is not my style of trading. I am just showing how the candlesticks are working. Okay, see, this is a reversal pin bar. Even though we have pin bar here, we have, see, you see, we are having a doji. We don't take these candles into consideration. Candles in between the chart, or these type of candles formed in between the chart, we don't give any value. Okay, but the candles formed at the right location is very, very important, and it will show the reversal of the chart and movement of the chart where the chart is likely to go. Okay, now see here, right at the support line, you can see one more doji. Doji means indecision candle. You see, I will show the candle. See, this is an indecision. Can you take a long trade or short trade here? No. Why? It is showing indecision. These are all small dojis. This one is doji and this one is also doji. So you can't take a short trade or you can't go long here. Okay, you are not getting confirmation. Buyers and sellers are equal in this point. Okay, sellers are trying to push the market down, buyers are trying to push the market up. We are just sitting outside and watching what is the price action in this point. Okay, if this candle, if I will show you, if there is a price action like this and if it breaks this area, this CPR area, then we can go for a short trade. Okay, if it breaks this area and if it is going like this, we can go for a short trade. Right at the support area, the candles are turning and it is showing a bullishness. Okay, now traders will enter at this candle and they will go long. Where will they keep the stop loss? They will keep the stop loss below the central CPR. They will keep the stop loss below the central CPR and they will go for a target of previous day high. Okay, these lines should be already marked in the chart. When you apply CPR, previous day high will be marked and these resistance lines will be marked, and this blue line is weekly CPR, which we will study when we study about CPR. Okay, now we can draw one more line. You see, this is the opening candle. Top of the opening candle also we have to mark. Top of the candle can also act as a support and resistance. If it breaks this level, this resistance level will act as a support, and if it faces resistance, the candles will turn around and it will show a reversal. Now see, can you see anything in this chart? Anything more in this chart? See here. Right at the resistance level, you can see a pin bar. I will zoom in. See, right at the resistance, we have two resistance, previous day high level and today's candle opening level. These two lines are resistance here. Right at this point, candle tried to close above, but it was not able to close above. Sellers came here, aggressively sold, and it is showing a pin bar. This pin bar, we have to take it under consideration. This pin bar, you see. Therefore, I told you, candles at the right location. We are just following only three candles. The full candle, the pin bar, inverted pin bar, then doji. Okay, doji means the indecision candle. We are not taking any other candlestick into consideration. We don't want to learn about any other candles. We don't want to know about. Right at this location, we are waiting for a price action. We are seeing which type of candle is formed, and here a perfect inverted pin bar is formed. This is the confirmation of reversal, and you can take a short trade here, and you see the market is going down. This is how we use these candlesticks in this chart. We don't want to study all the given or by heart all the given candlesticks. We just need only the three candlesticks and it is enough for our trading. You can see the pin bar here, but you can see a doji here, doji in this place. This is also a doji. This is a pin bar. This is a pin bar, but this is also a pin bar. In between this area, in between the chart, if you see a pin bar or doji or full candle, this is a full candle, full engulfing candle, we don't take it into consideration. We only give importance to the candle which is formed at the proper location. Okay, in this chart, can we go long? Yes, we can go long if this resistance level is broken on the higher side. If it is broken on the higher side and if it shows a confirmation here, then we will go long. I will show you one more example. This is 18th of the same month. Same scenario. First, what will we do? What we have to do first? We have to mark the previous day high levels. Previous day means 17th high. It's here. 17th low, that's here. At this point, 17th low. Okay, we are marking these two levels. First candle on 18th is a reddish candle, full red candle. That means a bearish sign. In the first scenario, we didn't short the market because there was a support, CPR support. Okay. What about this reddish candle? Can we go short or should we wait for some confirmation? Okay. See, now I am going to apply the CPR. See the magic. Do you see anything in this chart? Can you see anything? Leave these lines, this blue line, green line, everything I will explain detail when we are going into the CPR class. Okay. Can you see anything in this chart? This red candle is a sign of bearishness. In the first scenario, we didn't short it because it didn't break the CPR. CPR was below the red candle. There were possibilities for a reversal and it happened so. Now you see the first candle itself broke the CPR strongly. If it is breaking the CPR, it is a sign of bearishness. Now you can go for a short trade. Where will you keep the stop loss? You should keep the stop loss here at below the central CPR or above the CPR. Okay, both the stop loss is okay. Now you can go for a short trade because the risk reward is also favorable for us, because the candle is closing just below the CPR, and if you take a trade here, you can get a movement up to previous day low. This previous day low we have marked because this previous day low can act as a support. There are possibilities of market getting reversed at this position. Market can turn like this. Okay. If it breaks, it can go to the next level, but there are high possibilities and chances for reversal. So we are taking a trade, entering a trade here and keeping a target up to the previous day low. Okay, our risk reward is okay because we are taking a risk, only this much risk, and our reward is this much. Okay, 1:2, more than 1:2 is our risk reward. Therefore, we can take trade. We use this tool for finding the risk reward. We are taking a risk of this much and you are getting a reward of 1:3. This is how we take trades. Okay, if you are going for a positional trade or if you are an investor, you can follow and look for the same type of candles at the support and resistance level. Okay, clear? I have taught in one video how to mark the support and how to mark the resistance. In that level, you should watch these candles, these pin bars, how it is forming. If it is in the resistance level, you should look whether there is a formation of inverted pin bar or it is breaking that level or creating a bullish candle. If it is breaking that level and creating a bullish candle, you can go for a plan for a long trade. Okay, you must see whether there are any other resistance above. That clearly we can study when we go to the CPR. Don't be confused. Watch the video repeatedly again and again and understand the concept of candlesticks. Okay, without price action, again and again I am saying candlesticks, learning about candlesticks is not will not give any value. Okay, candlesticks itself cannot make any sense without the price action levels. Okay, I took two examples about the bearish signal. If you are going for a bullish side, the just opposite we have to follow. We have to see all the candles when it reaches the resistance level, what is happening in the resistance level, what is happening in the support level. Is it creating a pin bar? Is it creating an inverted pin bar? Is it creating a bullish candle? Okay, is it making a doji? What is happening in the resistance area? What is happening in the support area? This is what we have to follow. Price action trades analyze the chart at the particular positions like resistance and support levels, CPR levels, they see what type of candles are formed. This is why I am saying candlestick, studying only candlestick is not useful. Candlestick at the right position is useful, and we can only take that candles into consideration. Okay, I have made a clear presentation how we should read the candlestick. Don't follow any other candlestick, any other name. Don't remember any other name. Take only this candlestick. Remember in your mind. Study the logic. Okay, everything, and we can easily apply it in our trade. If you see and apply in your chart, you will get more confidence and more confirmation in each and every trade. I think you got a good knowledge about what candlesticks these professionals use and in which location we have to use it. Okay, actually this subject about candlesticks is a very lengthy subject. If you buy a book about candlestick, it may have more than 300 pages. Actually, to make all this in one video is impossible. I have to talk a lot more about candlesticks actually. So in the upcoming videos I will be clarifying more details about candlesticks. Watch patiently, and one thing I will say, a 1,000-mile walk starts from a single step. Remember that. Okay, if you are studying step by step, definitely you can reach the point, no doubt. Learn more and earn more. This is John Kingston signing off from JR Trading Zone. Goodbye.